Okay, let's run it. So today's lesson, we're going to be going over break of structures, market structure shifts, change in the state of deliveries, and I think that's it. So let's go over these three. Let's go really quickly over what each one should look like, and let's do that real quick. So I'm going to single out two things real quick. The two things I'm going to single out are break of structures and market structure shifts. And the reason why I'm singling these out is because the break of structure and market structure shifts should be on your swing points. So that means a swing high or a swing low. Okay. So what do I mean by swing high or swing low? That means that, hold on. That means that in this, in order to get a break of structure or a market structure shift, you need a swing high or a swing low. And a swing high, very simply put, is a candle where to the left and to the right of it, the wicks are lower, making it a swing high and vice versa for a swing low. So it should look like this. Okay. Then feel free to stop if you guys have any questions while we're doing this in the meantime. So this is how we can classify ourselves a swing high and a swing low. So what we're looking for in a break of structure and a market structure shift, and we also need to make sure that it's external to the range. So let's have an example of something like this. We can have a range like this. We can have a range like this, and this will be kind of similar to what a chart would look. So in each swing point here, so right here, this would be your first break and structure point here. You would have your second break and structure point here, right? And then you would have a failed break and structure up here as price never ended up coming up towards here, right? And here is where you will see your market structure shift at this swing low right here. Now, there are two ways to kind of classify market structure shifts, but we'll work on this in just a second. For now, we'll work on break and structures, right? So in order for now, sitting here, right, since we made a new swing low and we still have that old swing high here, right? Price has to do one of two things. Price either has to, in order to break structure back up to the upside and shift structure back to the upside. So this would be a break in structure and a market structure shift point. It needs to come up above this high. Now, if it wants to continue breaking structure lower, it needs to come below this low, right? And then we can apply the same principles again when we move this, right, to the upside, back down to our swing high, right? And then our new swing low. So anything that's not in these two swing points cannot be considered a break in structure or market structure shift. Note you can only have one market structure shift per kind of market structure here. So this will not be a market structure shift because you've already shifted market structure down. Does that make sense? Now let's look at inside of this range so that we can kind of get an idea of what is not a breakage structure. Since we have this swing high and this swing low, and price during this time has not either traded below this low or this high here, everything inside this range is internal. So we cannot consider this high, swing high being broken, or this swing high being broken, or this swing low being broken as any kind of break in structures. We have to look for these swing points here. Does that make sense? So that's break in structures. Real quickly, we'll go over market structure shifts. Now, there are two ways that we can do market structure shifts. You have your high probability market structure shift and your lower probability market structure shift. That is still considered a market structure shift sometimes in the eyes of ICT. I personally wouldn't, but we'll go over how ICT looks at them. There's two ways we can look at them, and then we can go and I'll talk about the differences between the two. So the first one would be something like this, where you have a sweep in liquidity above this high here, and preferably another high here, possibly coming into a higher time frame or same time frame fair value gap or something similar to that. Once that happens, you look for the most recent swing low that was created to take this high here. So for example, if we had something like this, right? And it was taken on here, right? Instead of this being this will be your market structure shift point here, right? Instead of it being this swing low, because this was the leg that ended up bringing it. Sorry, it'd be this one. This would be your market structure shift point, as this was the market structure shift, or this was the swing point that ended up sweeping this liquidity. Now, if we were to have another type of liquidity here, right? Then it would be this low here, because it was this low that ended up sweeping this high. So basically you want a sweep of the short-term high that was put in right before here, and a sweep of a higher time frame or another high up here to classify your market structure shifts. So now that we have that out of the way, we can look back to here, and you can see us shift down to the downside here, and this will be a market structure shift. So what is a market structure shift? Is basically telling you that we're switching order flow to either bullishness or bearishness, whichever one is opposite of what is currently going on. And this is going to be one of your earlier indications besides the change in the state of delivery, which we'll go over right now. Unless we have any more questions about market structure shifts, do we have any more questions about this? If not, then we'll move on to what change in state of delivery is. And change in state delivery is very similar here. Change in state delivery is actually going to be your earliest indication of a shift in market structure, or this change in the state of delivery of how price is delivered. And that's going to be, very simply put, it's going to be up here, and it's going to be your very first order block that is created, and you're going to use the wick for this one, and this would be your change in the state of delivery. And I'll kind of go over and draw out how it's kind of supposed to look here. So let's say we have kind of like an uptrend coming up here, something like this, right? Price is coming up, price is coming up. Maybe we come down just a little bit here, and then we come back up one more time here. And then we'll kind of come down like this. This black here. So blue is bullish, black is bearish. And we'll kind of go over what this change in the state of delivery is. And all the change in the state of delivery is going to be it's going to be something like, it's going to be your very first order block that is created here. So this right here, the second we come up here and we turn this into a bearish order block right here. Of course, you need some kind of key level or some kind of level up here to indicate that this is going to happen. This will act as our change in the state of delivery, and this is going to be the very first sign that we're going to see that we have shifted structure, right? And then we can assume if our market structure shift point is down here. You can definitely get in on an earlier entry with that change in the state of delivery there, and it's going to be right before your market structure shift. And again, it's the earliest here. Now, let's say, for example, we ended up having something like this, right? Where usually with order blocks, you would use the series of up or series of down close candles. However, in this case here, you're only going to use the wick of the very last candle here, or the very last up close candle in a bearish sense, or in a bullish sense, the very last bearish candle here. Does that make sense? Do we have any questions about that? And then we'll kind of get into some live examples here with that. Cool. Let's get right into it then. First thing we'll go over is changes in state of delivery, because very simply, this is the first example that happened, and it's one of the trades that I took in actually on Friday. So what you ended up seeing here is actually you do see two kind of different things here, and let me see if I can head up into a higher time frame to see if we can get any type of higher time frame PD array here, which we do have right here, right? We can consider this and log. Okay, just gonna get rid of that for now because that's not important, and we'll kind of just use pure market here. So here we are here. We have a 15-minute BISI, or a 15-minute bullish fair value gap here. See if I can get a little too far. Let me bring it back down here so I can kind of use it here. Okay, so we have a 15-minute bullish fair value gap here. I'm just going to mark this out here as 15-minute BISI. Okay, a BISI is a bullish fair value gap. And what we can see here is price ended up trading down into this BISI here. Of course, there were other external factors that caused the price to reverse here. If you guys are interested, you can look at the Outlook channel. And the first indication that we have switched bullish is that you can see these two down close candles here. The second we trade above this down close candle right here, this is your first indication of a change in the state of delivery here. And this is your earliest indication, and you would use the wick here. You can use the body. I use the wick every single time, as most of the time price is not going to trade to the body. But if you have a small wick like this, there's nothing wrong with using the body. Just for simplicity's sake, I'm going to use the wick, right? And again, you are not using the series of down or up close candles. You are using the very last one. And we can see this one was the one that swept this liquidity here, right? As well as came into a higher time frame PD array, which is what we see here in the 15-minute. You can see price come trade up and trade right back down into the change in state of delivery. If we want to use the body here, you can see how the bodies of these candles respect the opening price of this candle or the change in the state of delivery. Do we have any questions about what a change in the state of delivery looks like anymore? Cool. Now, the problem we have a little bit with the change in the state of delivery is you're going to see a lot of change in states of delivery. So, for example, right here, right, we ended up taking this liquidity right here, right, and coming into this fair value gap here, right? And what you can see here is that you have your change in the state of delivery right here. So we changed the state of delivery right here on this candle, once again, using the wick and not the body. You can see price comes up to take that and ends up coming back down into discount of this range before continuing higher. But we changed the state of delivery here before changing the state and delivery back up right here. And you can see price come right back to it. And again, since this is a smaller wick, you can use the body one more time. And you guys can see how well the bodies respect the second change in the state delivery after we change the state and delivery one time. Now, there is a little bit to this where you cannot have two changes in states of delivery like this back to back without a bearish change in the state of delivery here. Does that make sense? Cool. Now, we cannot consider this down close candle a change in the state of delivery. And the reason why is because one, we haven't came into another PD array. Yes, you can say we are still inside of this 1 minute here, but we also have not swept any sort of liquidity here, and we ended up making equal highs here. And this is why we cannot consider this a change in state of delivery. And this is why this was failed right here. Now, when can we consider another change in state of delivery is when we come up, take this high here, and we come back, break below the last up close candle that was used to take, or the last up close candle of the leg that ended up taking this liquidity up here, right? What did we also come into? We came into another 1 minute sell side imbalance, buy side inefficiency, or 1 minute SIBI here, bearish fair value gap. And again, you guys can use the wick here as you're changing the state of delivery. Or since we have a smaller wick here, you guys can use the body as well. I'm gonna use the wick for simplicity's sakes on all examples here. And you can see we did our change in the state of delivery downwards. Price came up. The bodies are respecting the change in state of delivery, and we come back down here, right? What happened? What ended up happening here, right? We ended up sweeping this liquidity right here before, once again, coming back up and making another change in the state of delivery here. Again, small wick. You can use the body if you want right here. And you can see we have a little bit more respect to that right here. But you can also use the wick here. And there's nothing wrong with the bodies trading through the wicks here. And especially look out for the mean threshold of this. If you are using the wick, and what I would do is for all change in state of deliveries is I would use the wicks to classify your mean threshold of it. Do we have any questions about the change in state of deliveries here? Do you extend this? Yes, yeah. You would extend the change in state of deliveries, and you can enter off them definitely. Yeah, it's definitely one of the ways to enter off them. Similarly, on how market structure shifts can turn into breaker blocks, and you can enter off breaker blocks. So, any other questions on change in state deliveries? If not, then we'll move on to the market structure shifts. Cool. Let's move on to the market structure shifts. And we'll use this same example here because we also do see a market structure shift as well as break-in structures. So what do we see here in this leg right here, right? What did I say a market structure shift looks like? It should look like something like this, where we come into a higher time frame PD array or sweep some kind of liquidity at least here, right? And preferably here in another higher time frame PD array. Remember here that we came into this 15-minute gap here. I'll just put on the actually it's not going to show because I'm too small of a time frame. But yeah, basically what we have here is we have this exact thing. We came into a higher time frame PD array, which was this 15-minute that was just sitting right here, as well as sweeping this liquidity right here. Now you want to look for the most recent swing high and swing low that was made here. So we have this swing high down to this swing low, and we traded up, right? So it's going to look something like this here. Boom, down, up like this, right? And this is what our market structure shift is going to look like. Something like here. So on the highest wick here, this will be your market structure shift point here. Do we have any questions about this so far? Cool. Now we're going to look for our bearish market structure shift point here. And this is where you're going to see the same thing happen as that change in state of delivery here, right? Is that you end up having your market structure shift point here as well. Now, of course, on a lower time frame, you're going to have these market structure shift points. But if we all know, if we do come to a 2-minute time frame, you won't have any market structure shift point here. So just be wary about where your market structure shift point is, especially in higher time frame market maker buy models or market maker sell models, because you are going to have some fake outs like this. But yeah, that's basically the gist of market structure shifts. We can continue to look for some market structure shifts here as well here, see if we can even find any. And you're definitely going to get a couple fake outs here when it comes to market structure shifts. So definitely do be wary of that. Like for example, here you have your market structure shift up here. Why? Because we ended up sweeping this liquidity, probably came into another PD array here and ended up coming up, breaking structure or shifting structure with this swing high here. Although we ended up falling down, you also do have to take an account into in a higher time frame here. This is not going to be your market structure shift at all. Right? You see how we failed to close here, and this is actually a 3-minute SIBI here. So just make sure that you have the right context for that market structure shift and that you are making the right decisions when you are using that market structure shift. Yeah. So market structure shifts can turn into breaker blocks and mitigation blocks. So I mean ICT does do it like this, and I'll kind of show you guys an example here. So for me, I would not be able to consider something like this a market structure shift point like this, because we did not take out this high here, right? Unless we form some kind of SMT here, right? This cannot be considered, or I would not consider this a market structure shift point. But ICT does refer to this as a market structure shift point sometimes in his 2022 mentorship. And what this is this also becomes a mitigation block, right? And similarly, if we have something like this, right, where we do sweep liquidity, classifying this as a market structure shift for me here, this will also become a breaker block as well. This will also become a breaker block here as well, right? And the kind of idea you want to see here is you want to see one asset make this mitigation block and the other asset make this breaker block, and that's how you know that you're really in a good run here. So if we want, we can go check out ES here, and we can see if you have that SMT, right? So let's see. Down here at this low, unfortunately, you don't have that SMT here, right? But that's not a big deal. Okay. Next we'll go over break and structures, unless anyone has any kind of questions about the market structure shifts here. So, I guess just to clarify here on a 5-minute chart, this can be considered your market structure shift point here. So long as, right? So long as the wicks trade below the bodies of these candles here. And the reason why is because what ICT classifies as institutional liquidity, or where institutionals will put their will classify them as liquidity, would be these lows right here. So as long as the wick is able to come below these lows here, you can classify this here as a market structure shift without price actually having to come down and sweep this liquidity here. Do I personally Not really, but you can classify this as your market structure shift here on the 5-minute, and you can see this 5-minute BISI ended up holding. And this also becomes a mitigation block as well, right? Okay. Finally, we'll go over breaking structures real quick. So let's get into this real quick. So breaking structures, of course, you're going to use your swing highs and swing lows here. So let's get to it. So here we have this kind of down leg right here. We make this swing low and we come up here, right? So where is your most recent swing high? This was your most recent swing high. So price has to come above this and close with the bodies in order for us to break structure back up to the upside here. We come lower and come below this low here to break us back structured into the downside. Since we ended up breaking structure down here into the downside, we have to look for our next swing high here, which would be this high right here. Yeah, this high right here. So price has to now trade above this high with body closes in order for it to classify us as a breaking structure here. We don't see that, and we see price end up coming down even lower, breaking structure at this swing low point here. And now you have to continue to do your search here. And since we came down below this here, you have to look at this swing high here as in order to break structure back up to the upside. Since we have failed to break structure back up to the upside and we managed to break structure back down to the downside here, right? This is where you can keep dragging it. And since we ended up making this swing high point here, this is your new swing high point where you're going to be looking for the breaking structure, right? And this is your new, and we have to wait until we make a swing low point. We make a swing low point here, new swing high point, and then a new swing low point here. So this is your new breaking structure here, right? And we can add and we can move our breaking structure down to this swing high right here. And we'll be looking for this to be our breaking structure here. I guess it'll be this one here because this is the highest high here, right? So what we see here is we see price. We have two things here. We have a breaking structure here and a breaking structure here, and we have to see which one we end up breaking first. You can see price ends up coming up here, technically shifting structure here because you'll never have a breaking structure. It'll always be, the first one will always be a shift in structure, right? So you have your shift in structure right here, right? And then this is why you can see this order block hold right here, as well as this fair value gap ended up getting reclaimed here. So we see this, and this is enough to send us higher, just a little bit up to here, right? Price ends up coming right up into here, which is coincidentally ends up becoming into the premium of the range here before shorting. We can see we end up doing something like this. And since we ended up making this new high here, we have a new market structure point here where we have to break here. And something that I would consider here for you guys is when you're looking at breaking structures is that when you have a whole bunch of wicks before the body closes above, you guys definitely have to look out for this when it comes to breaking structures, as you want your breaking structures to be clean with the bodies. See right here, breaking structure with a body, 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 right? And our breaking structure point will keep moving until it comes up to here, right? And since we have a breaking structure here, you want to look for your next swing high and swing low point here, which would be right here, which you do break structure one more time here before price ends up falling down here. Price then reshift structure back down to the downside here. And now you have to look for your next breaking structure points back to the upside here, right? And you have your breaking structure waiting up here, and you have your next breaking structure waiting down here. Right? And notice how once you get this market structure shift point, you can take your next PD array here and you can catch a little bit of a long here, right? Let's say you took it on this order block here and you had your stop loss below this low, and maybe you were targeting these equal highs here, right? Price does give you a decent run, enough time for you guys to go break even here, and then you guys will end up getting stopped here at break even, right? Then you have your next market structure shift point down here, and then you have your fair value gap right here, also an institutional order flow entry drill here before coming down, coming back up into this fair value gap here. So after the shift in structure, you take your first fair value gap right here, and you're able to take that down. Price comes up one more time into the fair value gap and comes back down one more time with a body closure below this low. Now we can shift our next breaking structure point up to this swing high, and we wait for a next swing low point to get put in here. And we have our next swing low point get put in here. Now, yes, we did close with the body. Hold on, let me find the breaking structure. Yeah, we did close below here with the body, but since it's such a minute amount, I would definitely be careful about that, and I would look for the next candle to also close within this line here. Since that does not happen, I'm not going to consider that to be our break in structure, and I'm just going to move our break in structure down to the newest swing low here, which would be down here, right? But since we ended up doing that, here's the thing: our break in structure or market structure shift point going higher is still going to be at this high, because this is all still our market structure here. This is the market structure high and this is the market structure low. And you can see price does not come up to that market structure high, meaning we're still in bearish price action here, right? Price ends up breaking down here, which would mark this as your new market structure high here, where you have to see price come up to, before having this low here traded through here, right? And again, you can see those wicks come through with those break-in structures, right? You can see a lot of resistance coming in here with the wicks. Price ends up coming down just a little bit more, right? And you can see your market structure shift point, once we break structure here, will come down to this high here. Then you have another swing low right here, where we end up making equal lows here, right? This will be your next market structure. This would be your next break-in structure point here. And that is the same time you would move your market structure shift point from here to here, right? Or here to here, it doesn't really matter, right? Either this one, because it's the one that took liquidity, or the highest swing high here, it doesn't really matter, right? And then after you see that, you have to see, we put in the swing low here, and we have to see if we're going to break structure back down to the downside here, which we failed to do while shifting structure back up to the upside. What happens? You take your first fair value gap here, and you can take that higher, right? Or you can wait for your change in the state of delivery, which so happens to be right here, right? Which is what we discussed earlier. And with that, we have our market structure shift point. We aligned it with proper high time frame, proper higher time frame inefficiency here, or PD array, right? With the 15-minute bullish fair value gap right here. Ended up being somewhere like right here. 15-minute bullish fair value gap came into it, shifted that market structure up, and you can see price end up running up. Now let's look for where our break-in structures would be here. It's still here, and our bullish break-in structure would still be up here. Nothing has changed yet, right? Nothing has changed until we break structure back up to the upside here, right? Then you can move your shift in structure point to be down here for bearishness. Then after we do that, we end up making another break-in structure here, which means, and you have to look for a swing low, which you don't get yet. Then we break structure one more time to the upside here, look for your swing low. You do get that swing low right here, so this becomes your market structure shift point here. This is your next break-in structure point back up here, right? What can you see price do? Price ends up breaking structure, coming back down into the discount of the range here. Once again, you do need that higher time frame context here, right? And price shift structure comes right back down here before continuing higher again, and I guess failing to really break structure here again, right? Your points never move here. This is your market structure shift if you want to break structure back down to the downside, and this will be your market structure shift if you want to, or your breaking structure if you want to shift back to the upside here. And you kind of just have to wait until one of this happens to see if you can classify them. Okay,